Welcome, everyone. Thank you so much for joining us for today's Appraisal Buzzcast. If you haven't already, make sure you're subscribed below so you'll get notified as soon as we publish our latest Buzzcast. Today, we'll be speaking with Joan Trice, CEO of Allterra Group, and Alfred Pollard, former General Counsel at FHFA. We'll be discussing the Home Valuation Code of Conduct, or HVCC, and its origination, and looking back on it with today's lens. Joan, I'll hand it off to you.
Thank you, Jim, and good to see you, Alfred. It's been a while.
Happy to be here.
Especially since we've all been in lockdown for the last year plus. Let's talk about the home. Now that you're the former General Counsel at FHFA, I presume you have a little more freedom to talk about some of the historic events in the mortgage crisis. And let's talk specifically about the Home Valuation Code of Conduct. So remind everybody what those events were, how they unfolded, and
Sure.
Go ahead.
First, I do want to state, and I appreciate the opportunity to meet with you today, the significance of appraisals. You know, when I engage in meetings, I frequently say, well, it's everything in real estate from appraisals to zoning. And it's ironic that appraisal starts the list. And in many ways, it remains one of the critical elements of someone getting a home mortgage or refinancing. That loan to value ratio is just critical. People need to get a handle. Secondly, in the financial crisis, it was one of the earliest signals of something going awry, the appraisals that were coming in. Now, I'm not trying to besmirch anyone here, any individual appraiser, but I think we would recognize there were some appraisers that were getting a little behind or a little ahead of themselves. So it is interesting that when we talk about the financial crisis, the issue for appraisals was coming up in 2004 and 5 and 6. And what happened primarily is that with the bursting of the dot-com bubble in 2000, a lot of money in the United States was trying to figure out where to go. And this led to a rise in investments in home mortgages, the creation of new mortgage instruments, and basically at the other end of the spectrum from the appraisal, the financial services industry, particularly investment banks and investors, wanting more and more products. They had to put their money someplace, and it looked like it was mortgages. So we saw an incredible growth of the mortgage securities market to the point that we had derivatives of that market, 2 and 3 tiers of derivatives, collateralized debt obligations, all types of instruments were eventually created during that period of, I'll call it 2002 to 2005, 6, in that time frame. So that was one issue, was the turning of the investment market to mortgages as an investment. Second was something that had been going on since really 20 years, almost 20 years, certainly 16, 17 years, was interstate banking and bank consolidation. So a lot of banks were buying banks in other states. And of course, they wanted those banks to expand and do their businesses. And one of the problems with that, you frequently find out, is the new bank in town wants to expand its business, get a lot of customers, do a lot of business. And the first bank where this was seen, I shouldn't say first, but one of the first banks that was seen was Washington Mutual in Washington State, moving into California. The First American Corp was someone they were using to try and expand. I don't want to say they didn't have trouble in Washington State, but they certainly were having troubles in California. And you tend to try and price your way into a market, charging less, offering more, things like that. And that's really what started the interest in appraisals, and also, I believe, signaled the impending crisis. And WAMU got into a lot of problems. There were exams being done of the firm. And it caught the interest of Attorney General Cuomo in 2007 in New York, then Attorney General Cuomo, to investigate this and to see what records he could get from Fannie Mae and Freddie Mac. As now, this is pre-conservatorship. This is pre what everyone calls the financial crisis. But by 2007, a lot of the firms on the front line of subprime loans, 228s, 327s, all these mortgages that were really made for a rational purpose, but offered to the wrong people. All of this was starting to come together. Ironically, the first banks to lose any money were from France. They had invested in several US subprime lenders and were starting to lose business. So there was this preliminary problems emerging out of the expansion of banks and the demand for products. And remember, at this time, the ongoing mantra domestically and internationally was mortgages dash the safest investment in the world. US mortgages, the safest investment in the world. Well, I think that's true, has been true, as long as everything's being done properly.
Well, if my memory serves me, Alfred, didn't Washington Mutual also use no appraisals on a good portion of their loans, and they used AVMs?
Every device they could use to expand their market.
They did.
And they had a very conservative chairman, is the irony of it. I happen to know him, very conservative, but I guess in this expansion effort, he just got caught up in a whirlwind. So there was a subpoena issued, and we reached out to the Attorney General asking him what is going on. And he said, well, there's this terrible crisis with appraisals. We had not really heard a lot about it, but there it was. I would tell you that both Fannie Mae and Freddie Mac in the same time period had begun their deliberations regarding appraisal data, appraisal formats, and appraisal requirements. They had each independently begun to look at what do we do about appraisals from our perspective in the GSEs. So there were a lot of moving parts even before. Everybody wants to say 2008 is the kickoff of the crisis, but the kickoff of the crisis, I could argue, is 2006, 7, and 8, when the underwriting just became atrocious. So Attorney General Cuomo reached out with this complaint, and the agency just stepped in and said, you know, these are Fannie and Freddie are federally regulated entities, and you're going around trying to subpoena them and everything is nice, but we have some problems with that. We're happy to work with the enterprises to see what information they may or may not have. And what people don't understand is there are all types of players in the mortgage-backed securities market. And at the time, a lot of these people were not selling to Fannie and Freddie at all.
Right. Alfred, let's break right there for commercial message. And when we come back, let's get into the specifics about the
codes.
How did we get the code and so on.
Happy to do that.
All right.
Stuck in the appraisal management technology dark ages, using spreadsheets or antiquated software, you should meet Evo. Evo is the most innovative appraisal management technology on the market, trusted by lenders and AMCs. It's loaded with mind-blowing features like sophisticated decisioning algorithms to select the best appraiser for each order, the ability to configure forms and fields in real time, a user role-based design, and the industry's only compliance guarantee. Find out more at globaldms.com or call 877-866-2747. Joan, back to you.
Okay, so Alfred, I didn't even know that things transpired that way. So it's not like he imposed the HVCC upon FHFA and Fannie and Freddie. It was a subpoena came first.
Well, he had subpoenaed documents directly, and we basically just objected and said, what are you doing? Why are you doing it? And whatever. But it did begin a series of negotiations that went on. This code was very contentious. Attorney General's office did a first draft. We sort of thought it was doable. But in speaking with the bank regulators at the time, they had significant concerns because they were regulating all these banks that were ordering appraisals. So while we were regulating the people that bought the mortgages, the bank regulators also were interested and involved. And they became partners, I would say, in the work that we did. But these negotiations were very difficult. Everyone was trying to, at the lawyer level, I can't speak for the political level, but at the lawyer level, to make sure they were insulating appraisers from improper contacts, not trying to insulate them from any contacts. And there were just a lot of what I would say is negotiations generated by new information. So I'd have to be candid and tell you, I didn't know what an appraisal management company was. And all of a sudden, they were becoming involved in the discussion. So these discussions were very, very contentious, difficult. I had many meetings in New York. I had many meetings by phone. The staff were very engaged at the Attorney General's office. They were not experts in appraisals or mortgages. They were experts in law enforcement. And in seeking to do this code, there was a great deal of pressure to get it done. And I think our feeling and that of the bank regulators was it's okay to get it done right. And I understand people would disagree that it wasn't right, but it was just, I think, a competing pressure of let's get this wrapped up. It shouldn't take this long. And it took well over a year and a half before December 2008. And we'd begun as early, I think, as May 2007, having discussions, writing up drafts, having meetings, and the Attorney General personally involved throughout this time. So that then led to a drafting, redrafting, changes. I'd have a call at times and said, I think we're done. They'd call back and say, great, we'll sign it. And I said, no, I think we're done is a different quotation and means it needs a further reflection. So I think the goal of the code was to resolve what we were learning about in the market, which was calling up an appraiser and saying, I need 400,000 on this house. And if I don't get it, I'll get another appraiser. That's what we were hearing was going on in the marketplace. So the main goal was to have appraisers do their work, not to have them influenced by parties who had a vested stake in making the loan, or even by an appraisal management company. There, as you know, in the code itself, that errors could be corrected. Lenders could still use AVMs to ask internally, to ask questions, and basically just to communicate, to explain the basis with the appraiser. The code provided other things like no cost to a borrower. Clearly, the idea was that the loan function at these banks or at a mortgage company should not be in charge of or running appraisals. That should be done by some separate party who is just securing the appraisal. As you know, there was a small bank exclusion that's actually defined in statute. The number goes up every so often. It generally was just saying the sales team who were trying to get these mortgages, they really weren't even making them for the benefit of the bank as a mortgage. They were making them for the benefit of an investor to get them out the door as fast as possible.
Right.
We basically, in my judgment, did a decent job. I think a lot of people clearly overreacted. The headlines that came out, and headlines matter, particularly in a crisis, was you can't talk to appraisers. So people said, well, we better hire an AMC because somehow magically they can talk to appraisers, although they were prohibited as well from actually getting into the individual appraisal. So I think in 2008 to 9, that's the lifetime of the HVCC before the Dodd-Frank Act. There were a lot of, and I remember meeting with about 1,000 or 1,500 realtors in Las Vegas, where they meet every year to go over this. And it was just a ton of questions. And it clearly sometimes, ironically, the simpler the language is, the more complex it is. And
Yeah.
actually, the 6 pages of the code was actually pretty simple stuff. You can't do this, you can do that. And it appeared to us, and certainly to me as a lawyer, that it was pretty clear. But that didn't mean that we had all the expertise of what these words meant to appraisers
Well, I
and what
think
these words
Alfred,
meant to banks.
it was clear. It was just not, I think people's ability to accept the change was where the resistance came in. But let's take another break. And then when we come back, we'll talk about where we are today. And did this really have any impact on where we are?
In uncertain times, you need a certain partner. You don't have to sacrifice top-notch coverage for an affordable premium. Intercorp has all the options and is sure to have just the right one to fit your specific needs. They provide the appraisal profession with competitive best-in-class E&O coverage solutions nationwide. Having served the insurance needs of the industry for more than 25 years, Intercorp understands the risks you face every day. Whether you're an individual appraiser, appraisal firm, residential, commercial, or an AMC, visit intercorpinc.net to get a competitive quote today.
So Alfred, bring us up to date here. So as I recall, the Home Valuation Code of Conduct was sunsetted into Dodd-Frank. Is that an accurate
Yeah,
characterization?
the Dodd-Frank Act was a little stronger than that. It said the HVCC is no longer enforceable by
Okay.
Fannie and Freddie and so on and so forth. I think the demise per Mark Twain was overstated about the contents of the HVCC. When you look at the language in the Dodd-Frank Act 1472, most of it is straight out of the Home Valuation Code of Conduct. So they in effect, I think there was a bigger news story that the HVCC has gone away than the reality that the provisions about protecting that were intended to protect appraisers were retained. There was language, about out of area appraisers in Dodd-Frank following US PAP. Also, the customary and reasonable rate in the marketplace had not been in the HVCC. So there were both some changes and some additions. They had the AMC registry, roles for the FFIEC that, were not in the code of conduct. So, but I would tell you on the independent standards, as I looked at it at the time, they pretty much stayed the same. Now, of course, we've had iterations since then with rules on AMCs. The one unfinished piece of business is the customary and reasonable rate to be paid in a community. And that's one that has remained, along with several other items from Dodd-Frank, undone in the last 11 years. That's not the only provision. I do want to note, with the topic of where are we today, that Fannie and Freddie were at the time and subsequent putting in place, once they were in conservatorships, these uniform standards for appraisal data, mortgage data, all of these elements. And ironically, I think the first one up was mortgages, appraisals, excuse me. So you have this movement to at least harmonize what Fannie and Freddie were doing, which I think should benefit the markets in general over the course of the last 12, 13 years, which is to harmonize their servicing standards, their appraisal data requirements. Now, I understand there are problems with individual provisions, but I think the goal of having uniform standards for dealing with Fannie Mae and Freddie Mac, and I can't speak to the VA or USDA or FHA, but I think that to me should be a positive. Whether it's a positive is up to the appraisers, but in terms of the attempt and the goal was certainly to not have two standards coming out of this on the same product. Let me, if I could, if you don't mind my turning it to a question I'm going to ask myself, is what did we learn in this time frame? And what most people are unaware of is there's only one major court case that took place regarding the subprime mortgage crisis. And that's a case that FHFA brought against Nomura Holdings. Nomura was investing absolutely in such a rapid, crazy fashion. It was amazing. while there were many elements to the case really turned on a couple of key points, one of which is called due diligence. And due diligence is what was everybody in the system, the lender, the appraisers, the people who put the securities together, the people who sold the securities, what were they doing about their due diligence? Because at the end of this process of securitization, someone has to have a ability to figure out whether the security is AAA, AA, and how much they're willing to pay for it, and also to figure out how long the math would, the mortgage would be in place. I would tell you that appraisals were a major element of the trial. FHFA had an appraisal expert who had an automated valuation model that he applied. He also reviewed an approved number of appraisals for review. He looked at everything from what cities had in their databases, credit scores, every single thing he could look at, but he was looking at US PAP and everything else. His review showed, and some of these are fuzzy terms to me, that the appraisals had an upward bias in these securities of 8.9%, and 31% of the sample appraisals had material inflation, 27% lacked credibility, which I think is an appraiser's term for reliability. 58% of the appraisals he reviewed did not meet industry standards for loan appraisal. Now, you might say, well, that's interesting, but what does all that mean? It meant that for this multi-billion-dollar purchase of securities, that there was no due diligence done. The companies along the road considered themselves conduits. They were just passing stuff along. Witnesses testified from Nomura, the bank involved, these are US citizens working for this Japanese bank, that their diligence, as one of them put it, consisted of looking at documents, and if he saw a lot of redlining, then he figured it had been reviewed. The appraisers in question, I have to tell you, did not do a good job when they testified. One of them, who claimed to do 400 appraisals a year, admitted he did that while also employed as a full-time fireman. So now, why am I bringing this up? Am I trying to bash appraisers? No. What I'm trying to say is it really matters what appraisers do. In this lawsuit, we recovered over $800 million. 833.
That's a lot of, yeah, that's a lot
from
of
Nomura. And it had turned on the use, and I'll just say it, of bad appraisers being done in an inflated market. And that's the big fear, I guess, that I'm concerned about today, is we can get in just as heated a market again. I don't know the current one where people are trying to buy second homes in the country and all that qualifies, but clearly the events of 2004, 5, and 6, and 7 can be repeated, and appraisals were essential, or a critical part of what went wrong. There were also mortgage brokers instead of bank employees who were out making these loans. They were not licensed. Many of the people they employed were college students. They were forging documents. There was fraud and a lot going on. So appraisers are not the core, but what I'm saying is appraisers remain vital parts of the whole process of making mortgages and selling them in securities. They are absolutely critical. And one of the biggest parts of our court case that we won, the only case to actually go to trial of the 18 we brought, was on poor appraisals and then the lack of diligence by these companies. So,
but Alfred, there's an interest. I mean, what you just described is exactly what's going on today. Nothing's really changed. We have a frothy market, and because things are being bid up over ask, there's lots of pressure being put upon appraisers to meet the contract price. And so where are the enforcement actions? Where are the regulators? And why aren't alarm bells being sounded?
Well, I think the first thing I'd say is what I said earlier. There's only so many people in Washington who have the expertise in the government about appraisals. There's a lot of expertise required of folks in Washington in various subjects. And FHFA has some very strong people on that, but their numbers are not large. The way this was written up, as you know, in the Dodd-Frank Act, was the appraisal subcommittee, FHFA, was supposed to be sort of overseeing all this and making sure that the states were doing their job. In terms of what, it's a little hard to compare this, Joan, to the crisis a little bit because we don't have banks failing. Remember, all this was going on for 4 or 5 years, and you can argue where were the regulators during that time frame?
Right.
They emerged most clearly in a crisis, unfortunately. And if we're at that place where appraisers are under pressure, appraisals are not being done properly, or even there are a few bad actors, that is a matter of concern and should be taken into account and brought to attention of all the regulators in Washington.
Very interesting. Jim, do you have one more message for us?
ProxyPix is the first of its kind on-demand system for getting the location-specific media you need from wherever you are. Their simple-to-use platform creates an online marketplace matching people needing property photos with proxies or data collectors near the requested location. Through crowdsourcing, you can get the current up-to-date photos of anything on the map within hours, if not minutes. Never before has it been simpler or more economic to get the property photos you need. Sign up at proxypix.com or download the ProxyPix app available on the Apple and Google Play Store.
Thank you, Jim. So, Alfred, are there any, in conclusion, final pearls of wisdom you want to leave our audience with today?
I thought you were going to ask me for diamonds, not pearls. No, I think the lessons, what I would argue is this: there are frequently articles written about lessons learned. And I guess part of what I've done today is give you some lessons I learned. The problem is human beings are key to everything we do, not electronics, not machinery, not models. None of that is as critical as human beings. And I am a firm believer in appraisers. I'm a firm believer in the frailties of human beings, but also the strengths. And I think that strength needs to remain in place by appraisers. And the message that you've actually conveyed to me needs to be conveyed here as well in Washington.
Excellent. Well, thank you for joining us today. And hopefully we can do this again soon.
My pleasure. Enjoyed talking with you.
All right. Thank you, Alfred.
Thank you, Joan, and thank you, Alfred, and thank you, our listeners, so much for joining us, as well as the sponsors who help us keep this going. If you have an idea for a future Buzzcast or would like to be interviewed, reach out to info@appraisalbuzz.com and head over to the forums at appraisalbuzz.com and let us know how you feel about today's podcast. Thanks and have a great day.